Have you ever looked at the incredible growth in the UAE and thought, man, how do I get in on that? Well, today, that's exactly what we're going to do. We're breaking down the UAE stock market step by step to take you from just being curious to feeling confident about making your first investment. Let's jump in.
So first off, why the UAE? Well, because it's way more than just a regional player. It is a genuine, dynamic hub for global finance, sitting right at that perfect crossroads where East meets West. And that unique spot creates a mix of opportunities you just won't find anywhere else, making it an absolutely fascinating place to start investing.
And if you're wondering what that opportunity looks like in numbers, how about 3 trillion dirhams? And get this, that's the market value of just one of the UAE's exchanges, the Abu Dhabi Securities Exchange. A number that big really gives you a sense of the scale we're talking about here.
Okay, so here's how we're going to tackle this. We'll start with the big picture of the UAE as a financial hub. Then we'll dive into the 3 main exchanges you need to know. After that, it gets really practical with a 4-step game plan to get you started. We'll look at some smart first investments and then wrap up with how to avoid those common beginner mistakes.
So let's zoom in on that big picture. What makes the UAE so important for investors? You don't have to look much further than the Dubai financial market. For the second year in a row in 2024, it was the best performing market in the entire GCC region. That kind of back-to-back performance tells you this isn't just a flash in the pan. It's a sign of a really strong, maturing market.
So, where does all this trading actually happen? Well, it's mostly focused on 3 main exchanges, and each one has its own personality, its own specialty. Understanding the difference is going to be key to figuring out where you want to put your money. Let's break them down.
This table lays it out perfectly. You've got your 2 local heavyweights, the ADX and the DFM. Both are focused on homegrown UAE companies and regulated by the SCA. Then you've got Nasdaq Dubai, which is playing on the world stage. It's regulated to international standards by the DFSA, and that's why it's the go-to for trading international stocks. So really, it boils down to this: local focus or global reach.
And this chart just shows you the raw power difference, right? The ADX is clearly the bigger player by market cap, but here's the interesting part. Size isn't the whole story. In 2024, the DFM was actually the fastest growing exchange in the entire Middle East and North Africa region. So you have this great choice between massive, established scale and really dynamic growth.
All right, so you get the lay of the land. Now for the fun part. How do you actually start investing? Let's walk through your personal game plan. And trust me, it's a lot more straightforward than you might think. Here it is, your 4 simple steps to get going. First, you need a National Investor Number, or NIN. Second, you pick a licensed broker. This is super important because you don't trade directly with the exchange. Your broker does it for you. Third, you put some funds in your account. And finally, step 4, you're ready to start trading. That's it.
And don't sweat that first step because it's gotten so easy. Forget about complicated paperwork. You can get your investor number completely free through apps like the DFM's iVestor app, which can even help you open a brokerage account right then and there. Okay, so you're all set up, you're ready to go. Now for the million-dollar question. What on earth should you actually buy? Let's look at some smart, accessible options that are perfect for your first moves in the market.
And just asking that question puts you on the right track. As a beginner, your goal isn't to chase some hot stock tip you heard about. It's about building a solid, steady foundation. So what does that foundation look like in the UAE market?
A fantastic place to start is with what they call blue chip stocks. These are the big, stable, household names with a long history of success. We're talking about companies you already know, like Emaar, Dewa, and Etisalat. And here's the best part. These kinds of companies often pay consistent dividends, which is kind of like getting a regular paycheck just for owning a piece of the company. Now, if the idea of picking individual stocks still feels a little intimidating, there's an even simpler option, an exchange-traded fund, or ETF. Seriously, just think of it like a shopping basket that's already filled with a bunch of different stocks. You buy one share of the ETF and boom, you're instantly invested in all those companies inside. It's diversification in a single click.
And a really popular choice for the UAE market is the iShares MSCI UAE ETF. With just this one investment, you get a slice of the top companies on both the Abu Dhabi and Dubai exchanges. We're talking giants like Emirates Telecom and First Abu Dhabi Bank. It's the ultimate one-stop shop for getting broad exposure to the market.
And for anyone who wants to make sure their investments align with their values, the UAE is a world leader in Islamic finance. In fact, back in 2007, the DFM became the world's first Sharia-compliant exchange. This means you can easily find stocks and funds that screen out businesses involved in things like interest-based lending, gambling, or alcohol.
So we've covered the what, the where, and the how. Now let's talk about what not to do. And honestly, this might be the most important part of our chat today, because it's all about protecting your capital and building smart habits right from the start.
I mean, think about it like this. You wouldn't jump behind the wheel of a car for the first time on a busy highway, right? Of course not. So why would you risk your hard-earned money in the market without getting a little practice first?
The answer is a demo account. Almost every broker out there offers one, and it is such a powerful tool. You get to trade with fake money, but in the real live market. You can test out your ideas, learn the platform, and make all your mistakes without any financial risk. It's literally like a flight simulator for investors. I can't recommend it enough.
Now, once you do start using real money, you'll find your biggest enemy isn't the market, it's your own emotions. And there is one classic emotional trap that costs new investors more money than pretty much anything else.
And that trap is panic selling. Look, markets go up and markets go down. A dip isn't just possible, it's guaranteed to happen. The classic rookie mistake is seeing that drop, getting scared, and selling everything at a loss. You have to remember, successful investing is a long-term game. It's about focusing on the real value of what you own, not the day-to-day noise.
And finally, a quick but crucial word on costs. Trading isn't free, and those little fees can seriously eat into your profits over time. Now, while using your bank might seem easy, dedicated online brokers usually have lower fees. But the most important thing is this: before you sign up for any platform, read the fine print and make sure you understand every single fee they're going to charge you.
And that really brings us to the perfect final thought. The fact that you've stuck around to learn all of this shows that you already have the right mindset. Learning first, profits later. That is the single best investment strategy there is. You've already taken that critical first step by learning. The only question is, what's your next one going to be?